according to you, what is price to perfection? Different lists. Let's just identify buckets.
Yeah, I mean, there are lots which...
But I know you have strong views about a few, so let's just start there.
It's not strong views. Like I've said this before to you on certain shows, that even when at the peak of the IT boom, if you paid a very, very fancy price, you didn't make returns. So the businesses will do very well. So it includes all, for example, EMS is growing 40-50%, no doubt about it. But it's also going to suck in capital, and therefore they will keep diluting you. And if you're paying these, 100 multiples, 60, 70 multiples for them, from a return perspective, you got to be clear, like what is the time horizon on which you're in. Same way, like food delivery as a business is now a $50 billion market cap. So even if you look forward, how many $1 billion of profit do you see coming out of this whole pack over the next 5 or 10 years? So there's things like that.
Capital markets, I think.
Capital markets is, again, it's like a secular thing. It's a trend line which continues. But again, there are stocks I also own there, so I better be careful that if you're paying 35, 40 times, and even for the ancillaries are now priced at 35, 40 times, and there's fresh supply going to come from the ICICI and the SBIs of the world who presumably will list their AMC soon, maybe this broadens out and you don't make those kind of returns anymore from there. So look, as an investor, I'm doing what you call mergers and acquisitions. At what price would I buy this entire company? And you don't really typically make money by buying things very expensive.
Correct.
And you buy when there's pessimism. And pessimism may be in different pockets of the market.
Yeah.
So we talk about that.
So there is pessimism in at least IT services, but this falls for you in a bucket, slow derating.
This
IT, pharma,
IT,
FMCG.
generic pharma. So this is old tech in a way.
Yeah.
And unless it transitions to new tech in a way, the value capture, for example, in pharma in the next 5-6 years with both biotech and AI coming in, is going to be new drug discoveries coming not from chemicals, but from maybe the biological side of stuff. Same thing in IT. We will do a Y2K for the next few years to create the data sets to make them AI enabled. But beyond that, the business models will really have to change substantially. Few companies will do it and they'll fall on the right side. But most of them, I suspect, won't. So that's also at 20, 25 type multiples. It's not pricing you the risk that you're running for. Like I gave you the example of old broadcasting companies, which slowly got derated down to 10x instead of where they used to trade in the past. So those would fall in that bucket. So what that leaves, for example, is I still think financials is the center of the boom in this period. Capital market guys are still very, very good. But when you do this whole consumption play, because I don't have exports, infrastructure, FDI and so on coming, we have no choice but to kickstart the economy with consumption. But that consumption has to lead to investment cycle coming back. And for that, the center of that will have to come back to, for example, there'll be companies like L&T at one end, and there'll be companies like SBI at the other end. That unless you see these two participating and performing, you don't really see a very big bull market continuation. So those, and then Finance Minister finally has come back to the magic word of privatization, where if the strategic sectors are left out of defense, aerospace and so on, there's no reason for the government to be holding on to, for example, its metal companies. Why are they in SAIL and NALCO and NMDC and so on and so forth? Why do they have so many PSU banks? Can they consolidate and bring a few of them together and so on? Now it's a neglected space, so there is some room to be made there. They may or may not be well created unless they go in the right hands. But I remember in the 2000s when privatization happened and you sat in, say, a Hindustan Zinc, it's like more than 100x for you. So there are opportunities in the market, but overall, it's a market which is very optimistic. Like I said, strategics are out, FDI investors are out, PE investors are out, a lot of Indian promoters have sold their stakes down. And the market's being held by price-agnostic retail flows. And if a mood changes a bit over there, and I hope it doesn't, then we are in then you have to wait for the next cycle where you have similar optimism, which may be 3 years, 4 years later. So as long as you're holding with a business with a time horizon now of 4-5 years, and your return expectations are the normative 15% type for this market, you'll be okay. But if you're thinking that what we made over the last 4 years is going to continue, I think you'll be in for disappointment.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Thank you for watching CNBC TV18. For all our top stories and news updates, follow us on our social media platforms.